Happy Monday, everybody. I'm sorry to report a gloomy day here in Chicago. I hope you had a great weekend, though. Today is August 8, 2022, and this is another important Monday market update. It's going to be a huge week, the biggest in a bit, I do think. Yes, we had non-farm payrolls this past Friday, but this week we'll see CPI on Wednesday, PPI on Thursday. These are not as well forecast as the job numbers, and they're much more closely watched. So let's jump into a wrap-up of last week, then we can do a preview of this week. Last week started a bit on the choppy side. We opened on Monday to the news that the Speaker of the House would actually be stopping in Taiwan on her Asian trip, despite what China's response and their firm warnings had been. So futures before the open sold off to session lows on that news. Eco news from overseas was a bit disappointing, but U.S. eco data was better than feared. And you know how I feel about that. We have not yet started to report good earnings or good reports yet, just a lot of better than feared. Is that how it all starts? We're going to find out. Stocks moved higher into the European close, but with no real conviction, and then turned negative into the afternoon. There was little else going on in the news on the markets, so the market stabilized, closed in the middle of the day's range, all of the indices down just a bit. Although the market pretty much shrugged it off, the Taiwan issue is worth mentioning. While the U.S. did a great job of confusing the world last week, either we support an independent Taiwan or we don't, it seems that the position depends on who you ask. But regardless, why does it matter? I just wanted to remind you, Taiwan manufactures about 60% of the world's semiconductors. And if China were to invade and take those facilities, well, do you really have to ask? Just look at what's happening in Europe, who allows Putin to supply all their nat gas and energy as a whole. Not good. This is why last week's passage of the CHIPS Act was so important. We don't yet, but we will, hopefully, with the help of these subsidies, build more chip manufacturing here in the United States. Before I get bombarded with the calls about the end of this rally due to the pending move in China, I don't think that this is a probable outcome at this time. May be hard to believe, but I don't think China wants to pick a fight with the United States at this time. They're dealing with COVID still. There's zero COVID policy, and that has taken its toll on their economic growth. Last week, they announced that they did not think that they'll make their 5.5% growth rate this year. They also know that major action will likely cause more global disruption, and the entire globe wants to get things back in order, China included. There's a lot being written and spoken about this, so we'll just have to see how that goes. Let's keep watching the Fed and inflation, because that's the thing, both here and abroad, but take note of why the Taiwan issue is such an issue. Stocks did open on the heavy side on Tuesday, as we actually saw Pelosi touch down in Taiwan. Overall, risk off was the tone. The JOLTS report came in. We're below 11 million job openings, only 10.7 million. Wow. Again, recall that 4 years ago, the favorite guy to beat up on, Elon Musk, was in hot water for saying we're all going to be replaced by robots. Well, we could use some of those robots now, yes. 10.7 million openings. By the way, I keep hearing about robot companies that are raising money in the private markets. Flippy at White Castle, Chippy at Chipotle, even a Jamba Juice maker I heard about last week. Regardless, we know that the job market is cooling. That's the report as of today. Wait till a little bit later in the video. You'll hear about a little bit more of that. But we're still at 3.5% unemployment, nearly 11 million jobs open, and every company west of the Mississippi seems to be laying people off. Okay, maybe only in California. But so as the job market cools, maybe the Fed gets less of an itch to be hawkish. Not sure it'll work that way, but we'll see. We did hear from Fed head Evans with some encouraging comments, but regardless of how much we can try to ignore it, the market did react to Chinese actions in flying planes into the Taiwan defense zone. S&P closed down 0.67%, Dow down 1.25%, NASDAQ down just a hair. The afternoon brought Fed heads Mester and Daly to walk back the previous comments by Evans, as both of them said the Fed is nowhere near done with accomplishing their mission. Stocks gapped higher on Wednesday morning as worry about China and Taiwan began to fade. Military exercises are going on, but not so much else. There is a worry that this will disrupt supply chain, but again, nothing yet to show for it. Global economic data was upbeat, China, EU too, but no worse than feared. We did get ISM services, and it was pretty perfect for the bulls. Headline numbers showed growth, so we're maintaining growth, and the big number was the falling price index, the lowest since February 2021. New orders were even up, pretty much in line, just not to rattle the Fed's cage. As of Wednesday, 50 straight days of gas prices falling, now down 17% since mid-June. Overall, after Wednesday's moves, the S&P was the highest level since June 6, NASDAQ highest level since May 3, and for the day, the S&P 500 was up 0.5%, the Dow was up 1.25%, and the NASDAQ was up over 2.5%. Thursday brought a flat opening as there was still geopolitical rumblings, soft earnings, and deteriorating eco data. Bank of England hiked rates by 50 basis points, the first time with a 50 basis points raise since 1995. A lot of warnings for the Bank of England governor to go along with that. More inflation, 13% by the end of the year, and a recession into 2023. Chinese missiles in Japan's economic zone led to some risk-off moves, and jobless claims met expectations. Fed head Mester still thinks we can land this in a soft landing. The markets were getting positioned for the BLS numbers on Friday morning. Dow down about 0.25%, S&P down ever so slightly, and the NASDAQ up less than 0.5%. It's all about jobs. That was Friday morning. The BLS numbers, non-farm payrolls, blew away estimates. Remember we talked about it cooling? It was up 528,000 jobs versus expectations of about half of that. This threw everyone off and sent everyone scrambling for their secret decoder rings to see what it really meant. Labor market this strong, and what comes along with it certainly throws cold water on the Fed pivot argument. And that we're in the peak inflation or peak hawkishness, I don't know. We'll see about that. All eyes will be on CPI and PPI numbers throughout this week, Wednesday and Thursday. Recall that when the last time CPI surprised the markets by not turning lower, the market had pretty ugly sell-off. We can see the rose-colored glasses are on, so we'll see what people want to see this week. The market ended the week after a busy but not so productive day on Friday. The Dow was down about 0.25% for the day, but down on the week. S&P and NASDAQ both down slightly for the day, but up for the week. So maybe some good news as we come out of the weekend. The Senate did pass the most recent important legislation out of the White House, the Inflation Reduction Act, right along party lines with the VP casting the tie-breaking vote. So yes, we are still a pretty divided country, at least in the Senate. The House plans to pass this later in the week and send it to the President for signature. A few notable items in this. There are 755 pages in this, so that's too much for this video, but climate change, healthcare coverage, deficit reduction, increased taxes on large corporations, and even a small excise tax into stock buybacks. If the read on this is that it is more important than that, I'll address it again soon. I don't think it'll affect markets too much, maybe energy and healthcare, so we'll keep an eye on that. Earnings season is coming along well, or not as bad as feared, and although estimates and price targets are being lowered, we're seeing 70+% of the companies come in ahead of revenues, 77% ahead on earnings. We are seeing wheat and other food products move again from Ukraine and Russia. That is a good thing. Sentiment is getting better. Supply chain seems to be words that are less used, and inflation may have even been growing at a slower rate. Gas prices are still down, but recall that even though we're seeing incremental movement, inflation target is 2% for the Fed. We are really far from that. And the Fed head keeps saying that they will keep raising rates until we get there. I do not believe that's true, but that is their story, and most of them are sticking with it. Even Fed head Bowman this weekend said that she thinks a 75 basis point move should be on the table until inflation is subdued. Remember, there is no Fed meeting this month, so the Fed heads will line up to speak. Listen closely. They may be floating some thoughts to see what the market thinks. We'll have plenty to chew on this week with 20-plus companies reporting earnings and, of course, the CPI and PPI reports that I've mentioned. We will also see unit labor costs on Tuesday, more inflation data, and then back in the spotlight, the weekly jobless claims number. Remember those high-frequency data points? They're back on Thursday. Friday, we'll get University of Michigan forward read on inflation, something that is being watched pretty closely also. As we've been talking about, this is probably going to be volatile for the rest of the year, but I'm still favoring the idea that we'll see a favorable second half of the year. Please note that as of today, markets are up big from the June lows. S&P 500 up about 14% from the lows, Dow up over 10%, and NASDAQ up almost 20%, all from the June 16-17 bottom. Just to keep in line with what I've been saying, I still think we'll have a good second half, check, but we'll still be down for the year. As of today, year-to-date, S&P still down over 12%, Dow down about 9%, NASDAQ still down almost 19%. Have we put in a bottom and gotten the recovery for 2022 already? I don't think so, but straight up is not likely here, so planning for the long term is still top of mind. Another big week, probably the biggest eco number in a while, the CPI on Wednesday, so let's strap in, see what comes. I maintain my bullish stance going into the end of the year, but the historically tough months of September and October do worry me. We know what that will bring, volatility, and that may bring opportunity, so we'll see how that goes. Stay in touch. Let's be sure to review plans for the second half. Come back Friday for another planning video. Have a great week.